You're listening to The Moose and the Loose, your 10 minutes action-packed financial podcast with your host, Mikey Hu. Hey, what's up, Market Moose? Mike from The Moose on the Loose. Happy Thanksgiving. Yes, I'm still working on Thanksgiving. No, actually, I recorded this on Friday, and I'm taking a day off. So I just want to let you know that I am very thankful that you are still tuning in to listen to The Moose today. So thank you guys for doing this. And to thank you, I want also to thank Brent that came with that question last week when I was talking about investing strategies in ETF. And he asked, what about retired or older investors and their relationship with investment and ETFs? In other words, what changes when you retire? Once you retire, the industry wants you to think that things are changing, like that it's a whole new ball game, and that you literally have to come to see those financial firms, those banks, those advisors to come and ask for help. They're not entirely wrong, though. There are a lot of things that change, but there are most of it that doesn't. Like your investment strategy should not necessarily change that much. Yes, you have to change your mindset, because for your entire life, you worked, you earned a living, you had extra capital, so you added capital to your portfolio. So you were in the accumulation phase for maybe 30, 40 years. And now it's time to make a shift in your mindset, because you're going to start withdrawing money. So instead of adding capital, you're withdrawing capital. So chances are the balance you have right now in your portfolio, well, it's close to the highest. It's, if not the highest level you will ever see, because from that point, you should be withdrawing, and therefore it should just go downhill from there. I know it's a bit bleak, but this is the whole purpose of saving that money, right? However, let me ask you that question. If your strategy during the accumulation phase worked for years, for decades, why would it stop working now? I mean, besides the fact that you're retiring, the strategy was working way before you started investing, when you started investing, and now it should continue as well. Of course, you must prevent your portfolio, and you must include this in your strategy. You must prevent selling during down markets, because the sequence of withdrawal when the market goes down, that could hurt your returns, and that could hurt your retirement planning big time. Like, that could make the difference between someone that can outlive its portfolio and leave something behind, and somebody else that is seriously struggling and not having any more funds at the age of 78. And we don't want to do that, right? So having some fixed income, having some cash reserve to make sure that during a down market you don't have to sell shares will likely do the trick. But besides that, the rest of your strategy should probably be the same. And most of it's related to your risk tolerance. So maybe as you age, you will have a higher risk, a lower risk tolerance, and you don't want to bother with stock market fluctuation. And that is totally fine. And if it's the case, then you should change your strategy. However, just want to add one more thought on this. If you're 65 today, chances are you're going to live until the age of 85 or 90, right? So statistically speaking, you have a very, very good chance to invest for another 20, 25 years. So how many bull markets and how many bear markets do you think you're going to see in the next 25 years? If you go back in time and you look between 1999 and 2024 to make 25 years, let's take a look at it. So we had the tech bubble. We had September 9/11. We had the financial crisis of 2008. We had the pigs. Remember, Portugal, Ireland, Italy, Greece, and Spain, big problem with Europe. We had the Grexit. We had the Brexit. We had China collapse. We had China revival. We also had COVID, inflation, stagflation, and all the other inflations that are coming up. And we're now in 2024. So this was the past 25 years on the stock market. Well, what do you think is going to happen in the next 25 years? Probably something similar. Maybe not COVID, but for the rest of it, crashes, bull market, panics, like craziness, hopefulness. That's pretty much all going to happen. One thing that was really interesting is between 1999 and 2024, both the U.S. market, so the S&P 500 and the TSX, reported a total return of around 650%. It's slightly better for the S&P 500, but I mean, both of them are like between 600 and 660% total return. So roughly, you would turn 500K invested in 99 into like 3.5 to 3.7 million in 2024. Kind of crazy, right? Just to show you like how big those amounts can become when you stay invested and you follow your strategy. But again, that came with a ton of fluctuations, a ton of moment that you may be thinking, oh my God, now I need to sell. What's going to happen in the next 5 years? Like the economy is struggling, people are losing their job, and I have not this ability to add capital anymore. I'm actually withdrawing money from my portfolio. So the anxiety is building up, and that creates a lot of emotion and it pushes you to panic. So what's the solution here? What's the key when you get into retirement? Well, the key, ironically, is quite simple, is to have a very high level of conviction in your strategy. Because here's the thing, there is not like a magic strategy. There's no magic bullet here. There are dozens of strategies that will work into your retirement, and you must pick one. The key to picking one will be the key to have a high level of conviction, to know what you own and why you own it. And therefore, when the market will be down, you won't care. You won't care because you will know that you have a plan. You have a structure in place, that the way you are invested is actually a good way and it will work, and it has been proven before, and it's in line with your retirement plan. And this is the key, my friend. So maybe the key for you is to have a portfolio that is mostly invested in fixed income, and you can retire on a low return because you saved a lot of money. That's perfect. Maybe you want to go with an all-weather portfolio to protect your portfolio from fluctuation, or maybe you will be like me, because I have no intention of changing my strategy and going for dividend growers, because you know that investing in thriving companies with robust balance sheet that keeps increasing their dividend are great businesses. They are businesses that will go through the next recession, that will go through to the next economic crisis and still pay its dividend and thrive after the storm is past. So that strategy, of course, can include ETFs. And then the key again will be to fully understand the ETF strategy and its composition. So you look at the asset allocation, you look at the sector allocation, the top holdings, and look at the worst years that ETF had. Like 22 would be a good example. The middle of 2020 would be a good example. 2018, if you can go back a little bit more in time for that ETF, just to see what could be the worst case scenario and if you are comfortable with that. If you are thinking about retirement this year, next year, you're getting close to it, or you just retired not too long ago, a few years ago, I am working on a new online community that will be called Retirement Rocks, because, you know, I already have Dividend Stocks Rocks, so I'm just going to have fun during retirement. You can join the wait list and give me some feedback about your struggle, because this website, this community will be for you to answer your question. So you can join the waitlist at moosemarkets.com/retirement. So that's moosemarkets.com/retirement. You just put your name, your email, you tell me about your biggest struggles, and I'm working with my team to come up with all the answers with a complete program that will help you build your portfolio, build your retirement plan, connect with other retirees, go through those emotions together, because there's a lot more than just finance to talk about when we're talking about retirement. It is an important moment in your life, and I'm trying to help you out, guys, to make it happen so you can have fun and you can make sure that retirement rocks. So moosemarquez.com/retirement, join the wait list. It's coming up for DSR members. It's going to be the first dib for them in December, and then it's going to be open to the public at the end of the year, beginning of 2025. All right, guys, that's enough for today. Enjoy your Thanksgiving. Have some fun. Maybe a good meal with friends and family. We're going to talk again tomorrow. And until then, don't forget to stay invested.
Hey, welcome to the disclaimer. If you're listening to The Moose on the Loose, you cannot really expect me to give you buy or sell recommendation or financial advice, right? You're here for fun, you're here for information and some entertainment. But I am not your financial advisor, I am not your broker, so therefore I'm not liable if you're losing money after listening to the podcast. If you're looking for some advice, go see a professional. If not, you can enjoy the show and do your due diligence after it.